Welcome back to another episode of That Crazy Triangle Guy. I just wanted to give a quick Bitcoin update as it appears we have found support here on the mean band of the Gaussian channel on the daily chart. Um, as I predicted in the last video, I did think that we may have wicked down through the mean band to this line of support off of these two lows back here, and we may still do that before tomorrow or tomorrow. um, but it appears we are finding support on the mean band here. Um, we had been trading in this symmetrical triangle, but had wicked down and closed some or formed candle bodies inside the top of the Gaussian channel here, so it was inevitable that we got pulled down a little bit, uh, but not necessarily all the way through the channel. And I gave several reasons for that. One here is that we would have had to have gone. These red lines represent the mean band, or I'm sorry, the top of the weekly Gaussian channel here, and the mean band of the weekly Gaussian channel here. So that would have brought us through the mean band of the Gaussian channel. We also have the 200 weekly moving average, which is around 26,000. I don't have it on the chart here, but it's right here around 26,000. Um, it would also pull us. It would have also pulled us pretty far down into the parallel channel that we've been traveling in since November. Um, and all these things in the current market were just not reasonable to expect. Now, more often than not, when we have candle bodies that break at the top of the Gaussian channel on the daily chart, we get pulled in to the bottom or out the bottom of the Gaussian channel and usually recover quickly then back through the channel. But I found several instances where that wasn't the case, where we either just got pulled in a little bit or found support on the mean band of the channel. And I'll get back to those in a second. But I promised in the previous video that I would show a third reason why I believed it highly unlikely that we would come much farther than this. I truly believe we would find support here, possibly wicking down to this red support line. And the third reason was the crypto market cap for the altcoin market. This is the total minus Bitcoin and Ethereum, total 3. It's called on the TradingView app. Now we're looking at it here on the 12-hour chart, and I want to explain why. When you go to the daily chart, you get a lot of noise. You get these wicks, these huge wicks, and I don't know why that is. Maybe that is the true trading range, and they apply some suppression to it or something. I don't know what formula they use to get this, but you don't see this throughout the trading day. It's only at the end of the day these large wicks will appear, and you're like, because I've been drawing, I would draw lines, and I'm like, wait a second, where did that come from? So I don't use the daily chart. I use any of the hourly charts don't have that that weird noise. So here we are on the 12-hour chart. Let's take it off auto. Now, since November, we had been trading in this parallel channel with the dashed lines. and forming a nice triangle here, ascending triangle, which we still are doing. However, if you use this bottom line of the parallel channel as the base of the triangle, it appears we have fallen out of that here, possibly back in at the end of April, towards the end of April. But if you look back here towards beginning of March, we're really just changing direction here. The chart is living and always changing, so you have to be able to adapt. So I found other contact points where we can form another parallel triangle using this, and right here where we wick down, which is really, really interesting. And then this channel also has a lot of contact points along the center line here. If I zoom in more, you can see it more if I zoom in. As well as up here, many, many contact points here and back here along there. And it just seems to fit. And especially with the action that happened yesterday, we wicked down exactly to the bottom of this channel and found support. And that is one of the other reasons why. If we had a huge drop in Bitcoin, it would have taken the rest of the market down, which it did yesterday, and it took it down right to here, and we bounced. Had we gone past that, it really wouldn't have been good news for the market. Now we may go past it. It's not good news. It's not horrific unless we came back down past here. But we don't want to see that, and we're finding support here. It all seems to make sense. So we'll do another video about what's going on here. Well, at least we can kind of take a look. This market's way oversold, undervalued. There's no reason for us to be down here. These, other than FTX, this is FTX here, which was, a black swan. We never would have been down here without that event. We're still trading pretty low in the altcoin market. Our high just over the summer was up here at 447 billion, and here we are at 354. I think we're going to recover here pretty quickly and get back up to this level here. And it may happen in the next coming weeks, but we'll get more into that in another video. Let's get back to, there were 4 other instances that I found in Bitcoin's history where we did wick down, or I broke the top of the Gaussian channel on the daily chart and recovered without falling all the way out the bottom. And I did point out I don't need all those little dots. I did point out in the previous video that it's very common for us, even in a bull run, to come into the daily Gaussian channel and have these wicks through it and then continue our bull run every few months, couple months, every month, few months, something like that. Just a part of the little pullbacks we have. So here was one in 2016 where we didn't wick all the way through the bottom. I thought there was one. Oh yeah, here's one in 2017 right here. 2016. There was one in 2014 here. and in 2012. Those were the only four that I found that we didn't go all the way out the bottom. Back here in 2012 somewhere. There we are. Now the one in 2016 is the one I want to look at because it's very similar to what's going on today. We had been out of the channel for many weeks, several weeks, about at least a month. Let's see, April 17th. Yeah, over a little over a month. And it's interesting. It's also in May. And then we did fall into the channel and found support here right on the mean band. Um, and then afterwards went on a pretty nice little run. And that was here from the mean band to the top of the run, an 80% move over about a month, the next month, a little less than a month actually. So I did take a fractal from there, and it's over here. There it is. We can move this up here. Because when I saw that, when I was looking at it in 2016, I said, you know what, that looks really, really familiar. And in fact, look at that. That looks very, very familiar. I mean, of course, it's not exact, but I mean, just the pattern that went on here. It's very, very similar to what's going on now. And here we find support on the mean band of the channel, and went on a nice little run. Wouldn't that be nice if that's what we are looking for now? But I do want to point out that was 2016. The moves were more and more dramatic than they are now. They're much more been dampened. So that was a 80% move. But what if we got half of that? 40% would take us right up there around $38,000. Which is a support resistance line that I drew. There's lots of areas of support and resistance in the past here, all along here. If you zoom in more, you can see it, but I don't want to do that now. So I think that will be our next area of resistance that we hang out in. But I'm getting a little bit ahead of myself. I just wanted to update you on the fact that let's get rid of this for now. Let's just move it away. I just wanted to update you on what I saw as far as us finding support here. And I do believe that barring any horrific data tomorrow, we should see a pretty nice bounce here in Bitcoin and the whole entire rest of the market through the rest of the week and the weekend and into next week. We are at the low point of our oscillation pattern, so that's about that. Oh, here's the Dixie. I did have that pulled up. Dixie has been running strongly upward over the early morning over yesterday in the early morning hours, and came all the way up here to about 101.836 and is bouncing back down as everything is continuing its oscillation patterns. The Dixie is traveling in this parallel channel that it's been doing since here in March for about oh yeah, since March. So yeah, well over a month, past couple months almost. Um, but it's funny. I extended this channel to the left, and it's also kind of been acting as a trend line. I'm on the hourly chart, acting as a trend line. Yeah, for many months now. But also, what's interesting about this channel, let me get onto a daily chart. So it's a trend line, and it's a channel we've been traveling in the past couple months. Now, if you zoom out, um, it's pretty significant. If you go on the monthly chart here, this is the Dixie over the past over 50 years, and you can see the pattern, the obvious pattern that plays out here. Up and down, up and down. Here we are up at the top of this parallel channel, this large dashed parallel channel. The center line has been resistance many a time here. And this channel that Dixie's been traveling in the past couple months is parallel to these channels here. So if you want to know where the Dixie's going, just follow the channel. I imagine we're gonna use this channel as a trend line, and of course we may, um, you know, bounce outside of it a little bit, but pretty much I expect to that to be indicating the direction that we're heading. So right now we're at the top of the channel, and I expect the Dixie to come back down here and test the 100 region coming up soon. Anyway, oh, here's the. I just wanted to. I had the weekly chart here just to show that those red lines that I had on the daily chart were estimates of where the weekly channel is going. So, yes. So we're here, and now once we bounce and break the top of this channel, yeah, we are heading up here. Now we will have to come back down and retest it more than likely. Actually, almost certainly, because this level that we're having a hard time with, 30,400 or so, 29,000, 30,000, whatever, this whole range here, has been a lot of support and resistance back here. It's been support, resistance here, and we've had a real hard time here with it as well. So we definitely will come back and test that for support. But whether we do that here real quickly, I'd like to see that real quickly, or further out here in August. We'll just have to wait and see. Getting a bit ahead of ourselves. So, like the video, subscribe to the channel. I'm really tired right now. And share it with your friends. And we'll see you next time.